Good morning, everybody. Hey, welcome to Tuesday, February 2nd. I hope your week is off to a great start. You know, yesterday was a banner.
It's 21 before 9 and your 105.7 Light FM. Good morning. And the sound of that cash register means we're going to double check and see how your money is doing this morning. Time to do that with the help of Phillip Statler from Statler Financial Services, who is on the phone this morning. Phillip, I put you on hold a little earlier than I usually do this morning as I've got a bad case of the sneezes. If I go quiet for a couple of seconds, there's a reason. Otherwise, how are you?
Hey, I'm doing well today, other than it was a little chilly when I got up this morning. But, hey, you know, other than that, doing well. Yesterday was a nice little bounce back from Friday. And, hey, it looks like it might continue today, Dave.
It does look like it. So far, our futures are pointing up to set the table. Yesterday was a 229-point day up on the Dow, almost 60 up on the S&P, and 333 up on NASDAQ. It didn't exactly get rid of all of the losses from last week, but it went in the right direction. That's for darn sure. We start out the morning because we've talked a lot about it for the last week. I guess we need to make the announcement. The meme brigade is backing off. GameStop appears to be over, doesn't it?
Well, you know, I don't want to count my chickens before they hatch, but it does look like it's going that direction. I know that their shares fell significantly yesterday, and we're seeing them, I think they fell another 40%. They've lost over half their value in 2 days.
I'm showing 6 points down in pre-market trading this morning so far. This is kind of where the amateurs are really going to get burned at the end of it all, isn't it?
Yeah, unfortunately, so that you know, at this point, the guys that they're figured out, they're really throwing around real money here. This is really money, and they're going to lose some of theirs, and that's not good for the little guy.
That's what I'm afraid of. Some poor kid with his iPad is saying, holy crud, I'm not going to make my car payment now because I lost all my money on GameStop. The backstory was it got bid up by a whole lot of amateur investors who decided it would be a real good idea off a Reddit tip sharing board to buy the stock and bring the stock up and turn the tables on a bunch of big money guys that had sold the stock short. Well, okay, fine. It cost a couple of hedge funds some really serious coin, but in the process, the price got bid up to the point where a lot of guys who bought it close to the top are right now looking at losing some really serious coin. You there?
You there, Dave?
I'm here. Can you hear me, Phillip?
I can now. I lost you there for a minute. You keep fading out. You just all of a sudden just stop. So, hey, but you know, GameStop is a deal, and yeah, unfortunately, there's going to be some blood on the table.
I think so. It kind of looks like they got bored with silver at the same time because the silver on the commodities markets is pointing downward sharply this morning too, isn't it?
Yeah, it is, but definitely not the kind of bath that we saw with GameStop. But it will continue, you know, as the lack of investors there pouring money into it for short sellers or whatever will hopefully stabilize that a little bit.
Absolutely. Just one of those codicil stories that come out in the financial world about how the pros never really lose so much that they go toes up, but amateurs sometimes really do take a bath when they start taking flyers on individual issues of stock, and then they get surprised the hard way. Other tidbits going out today. Two independent news items I got a kick out of. Number one, Tesla announced a recall of 135,000 cars because of malfunctions in the touch screen. No, the cars aren't catching fire or anything. It's just the touch screens are bad. But the other news item that kind of goes off the side of it is Elon Musk has announced that he's going to take a break from Twitter for a little while. Do you think those could be interlinked somewhere?
Maybe they are. Maybe that's a good possibility that he finds it's time to take a break now. But, yesterday we talked about a couple of things that would be.
Lost you, Phillip.
So on that front, Dave, we did see kind of a split deal there. ISM Manufacturing missed by just a little bit. It was expected to be a 60. It came in at 58.7. The construction spending, though, was a surprise. It was expected to be about 0.9% growth, and it actually grew by 1%. So that's a good sign for construction.
That's good. It is a slow macro week. I lost you there for a couple of seconds. You were referring to the ISM Manufacturing Index nationally, which came within, let's say, an inch of being what was expected. Fair reflection?
Absolutely. Yep. Both of them were really close to what was expected. One on the downside missed a little bit, and one on the upside beat by a little bit. So at least, I think at least on the construction side, that's some good news.
That's good to hear in the process. Let's get to the earnings because we got a bunch of household names that reported overnight and early this morning before the markets opened up. A bunch of people we've actually heard of as earnings season gets into the meat of it, right?
We do. We've got some popular names out there. United Parcel, UPS. They reported. They beat by quite a little bit. They came in at $2.66 a share compared to $2.14. Revenue was above forecast as well for that holiday quarter. They saw a 7.8% increase in their revenue per delivery package, which is one of their indicators that they watch. And obviously, because of the pandemic, online shopping has continued to surge. And so they are being blessed today, up 4.8% this morning, Dave.
Wow, I'm especially surprised on that per package macro because with the FedEx war that they had with Amazon for a while, I thought maybe UPS had struck a sweetheart deal and their per package price might actually go down a bit. Sounds to me like they didn't have that problem.
You broke up. I didn't really get all that you said, but I would agree. It doesn't look like their pricing's gone down any. So that's good for United Parcel and UPS as they, I'm sure, are getting ready to continue to battle with Amazon, because I've seen a lot more Amazon trucks out on the road as they pop up more and more distribution centers, Dave.
Absolutely. The UPS benefit from that little war FedEx had with Amazon was a temporary thing because Amazon's buying trucks like the government.
Exactly. So we continue to watch them as they get more and more and deliver their own stuff. So, hey, the next one I have, Dave, is Pfizer. Let's just face it. Pfizer's been in the news quite a bit this last year as they've been one of the vaccine manufacturers and producers. So they beat by 6 cents a share, they missed by 6 cents a share. Yeah, exactly. So, well, it probably just means costs were more than anticipated with the whole COVID thing, the vaccine. So, because their revenue was above forecast, they did raise their full year guidance, and obviously they are going to continue to benefit from the vaccine that they developed with BioNTech, and so we continue to watch them. They're trading. They're not getting a big boost. They're up about 0.75%, Dave.
Not bad in a company that big, though.
Well, no, it's not. It's a pretty good size, and I'm sure as a
Tap the microphone. I lost you for a second, Phillip. Are you there?
I'm there now. You're back again. Oh man, we're floating in and out today, pretty bad. So another one I have is Harley Davidson, the hog. They lost. Man, did they lose? They lost 63 cents a share. They were expected to make 14 cents a share, Dave. So they got beat up pretty bad. They're down almost 6% this morning.
I believe that probably smarts a lot.
Yeah, it really does. And then the last one I have for you before we really, well, actually I got two if we can make it through. We got ExxonMobil. They earned 3 cents a share, which was 1 cent better than expected. Revenue was below forecast. They're trying to cut expenses. There's one of their big shareholders that's trying to get them to preserve their dividend. And so that's, they're up almost 2% this morning. And then the last one I have for you is Sirius Radio. Yeah, so they did well. They beat on earnings and revenue. And I guess I really just didn't realize this. I didn't realize that they own Pandora. And so they've increased their paying subscribers on Pandora, which has been a big help to them. And they're trading up about 0.8% this morning.
I would imagine that probably was salvation for them. During the pandemic last year, with less driving around in cars, probably that wasn't their best year for that. So Pandora was a salvation for them.
Well, that's true. That probably helped them quite a bit.
Most likely. Resetting the table, up day yesterday, especially for NASDAQ, up by like 2.5% in one day. 45 minutes before we open this morning, Phillip, are we keeping the trend going?
Hey, we are, Dave. It is moving right on up the scale today. We've got the Dow up almost 0.9%. The S&P 500 is a little over 0.9%, and the Nasdaq's up 0.9%. Let's just throw in the Russell 2000. It's up a little over 1% this morning. So everything's moving in the right direction there for the investors today. On the commodities front, though, not so much. We've got silver down 6.6%, though it's pretty close to where it was yesterday when you and I talked at $27.50 an ounce. And we've got gold down 1.7% to $1,832 an ounce. Gold, Dave, man, it is trickling up significantly today. It's up 2.6% to $54.95 a barrel. Can you say $55 is coming?
It's getting awful close, and I'm noticing at the gas pumps, too, the oil prices are starting to get to that point where we can start complaining about the price of oil.
Exactly. Yeah, we're getting up over almost $2.50 a barrel. $2.50 a gallon is getting really close.
Yeah, it's getting up toward the top end of where I'd like to see it, the process. Overseas markets, everybody's relatively happy. The Asian rim markets all up, some of them up substantially off of our day yesterday. European markets are a little bit more tentative, but they're all in green ink 45 minutes before we open and halfway through their day. Phillip, it's GameStop's probably the best story of the bunch in terms of what can happen with the individual investor without any guidance. It really helps to have some neutral eyes without the passion involved when you're talking about your retirement fund. How do I find you for the guidance to keep my retirement safe?
Then give us a call at 863-382-0037. We would love to sit down with folks and help coach them into and through retirement. It's easy to do. Give us a call, 863-382-0037. Catch our website, statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
And, of course, back here again tomorrow morning on Light FM. Phillip, thank you so much, and we'll catch you then, all right?
All right, man. Hopefully we have a little better connection tomorrow. Have a great day, and I'll talk to you in the morning.
Thank you much. 105.7 Light FM and Statler Financial Services, Phillip Statler. If you owe 26...
Folks, obviously we had some technical difficulties today. There's some quiet in there. Hopefully the internet will be better tomorrow. But again, I want to thank you for joining me. Look, seriously, we want to be a resource for you. We want to be a coach to coach you into and through retirement. Give us a call. Let us be your retirement coach. 863-382-0037. Have a